Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 strong buy tech stocks with low PE ratios. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today's video was inspired by one of our viewers, Tom, who commented that he'd love to see some stocks with lower PE ratios. So that's exactly what we did. Today we're taking a look at 3 tech stocks that not only come in with a strong buy consensus from analysts, but also have the bonus of a low PE ratio. What is a PE ratio? Well, that is the price to earnings, and it is calculated by dividing the stock's current market price by the company's earnings per share. And a low PE ratio means that you're getting a bit more bang for your buck and aren't possibly overpaying for a current stock. We found today's stocks using the TipRanks stock screener. Found at the top of the screener menu with the stock screener, we looked for a medium to mega market cap. I wanted at least a neutral or outperform on the TipRanks Smart Score and growth potential of over 20% with a strong buy consensus. We then added the PE ratio filter to be below 15, and that gave us a list of just a few stocks down below. Just before we dive into our stocks today, this is a reminder that to celebrate Valentine's Day, TipRanks is currently having a 30% off sale. If you want to unlock some premium investment research tools, now is a great time to do so. You can head over to tipranks.com or follow the links in the comments down below to take advantage of the sale. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into our 3 strong buy tech stocks. First on our list today, we're taking a look at Vontier. They trade under the ticker VNT, currently priced just above $38 per share. Overall, in the past year, they are up 5.5%, gaining over 13% in the last 6 months, cooling off slightly here recently, down 1.5% over the last 3. Their PE ratio comes in at 14.4%, and they do currently score a 10 out of 10 on the TipRanks Smart Score. Vontier is a global industrial technology company with a focus on transportation and mobility services. They operate under 3 main segments, with their mobility technologies offering digitally enabled equipment and software solutions aimed at enhancing mobility ecosystems. This includes point-of-sale and payment systems, workflow automation, telematics, and data analytics. They have their repair solutions, which involves the manufacturing and distribution of vehicle repair tools, toolboxes, automotive diagnostic equipment, and software, plus their environmental and fueling solutions, providing environmental sensors, fueling equipment, field payment hardware, and software solutions for managing fueling infrastructures. Vontier actually just shared their 4th quarter and full year earnings report today on February 13th, coming out with an earnings and revenue beat, plus initiating some future outlook. They reported Q4 earnings per share of 80 cents, beating analyst expectations by 1 cent, while revenue came in at $777 million, beating by about $8.8 million. For the full year, sales came in at $2.9 billion, and for the year ahead, they're anticipating earnings per share between $3 to $3.15. Management commented that Vontier delivered a solid finish to the year, reflecting their disciplined operational execution and continued momentum with their convenience retail and fueling end markets. As they look ahead to 2025, they are confident in their ability to deliver on their commitments and are committed to achieving top-tier financial performance and creating value for their customers, shareholders, and employees. Now, we haven't seen analysts update any price targets following that report yet today, but we'll keep an eye over the coming days, as I'm sure we will soon. But with 5 current analyst ratings, the stock does come in as a unanimous strong buy. And the average price target comes in at $45.80, implying an upside potential of nearly 20%. Looking at those ratings down below, on the low end, we do have a buy at $44 for an upside of 15%, and our high end is $48 for an upside of over 25%. For our second stock, we're taking a look at NEXTracker. They trade under the ticker NXT, currently priced at $45.55. They are in the red overall in the past year, down 25%, but have been gaining lately, up 19% in the last 6 months and 14.5% in the last 3. Their PE ratio comes in at 11.9. NEXTracker is focused on providing solar tracking solutions and software for solar power plants. They design, manufacture, and supply intelligent solar tracker systems that allow solar panels to follow the sun's movement throughout the day. This maximizes energy capture by ensuring the panels are always at the optimal angle to receive sunlight. Their tracker systems include products like NX Horizon and NX Gemini, which cater to different solar project requirements, including those on complex terrains. On the software side, they have a flagship software solutions called TrueCapture that uses machine learning and real-time data to adjust the solar panel angles for increased energy yield. It optimizes the performance of the panels by adapting to weather conditions and site-specific characteristics. They came out with strong results for their third quarter at the end of January, with both an earnings and revenue beat, plus an increase to both their revenue and profit outlooks for the year ahead. They reported third quarter earnings per share of $1.03, beating estimates by 45 cents per share, while revenue climbed to $679 million, beating by $32 million. And the company saw a record backlog, reaching a new record as it increased significantly over $4.5 billion, more than doubling since their IPO 2 years ago. They increased their profit target for the year ahead by $75 million. Following that strong earnings report, we had quite a few analysts increasing their price targets and even a couple upgrading their ratings, including one at Barclays who upgraded the stock to a buy on flawless execution. They said that they now expect the company to track towards the upper end, if not above, all of its guidance metrics for 2025. Following another strong bookings quarter, they increased their fiscal 2026 numbers and now estimate NEXTracker is trading at a 3/4 turn discount to Array Technologies. They should trade at least a 2-turn premium to a closer comp due to the execution of managing the business well, especially this past year, which has had most of its utility scale peers miss and lower numbers. It cites the company's flawless execution for the upgrade. NEXTracker has received 19 current analyst ratings and comes in as a strong buy with 16 buys and 3 holds. And the average price target comes in at $55.67, implying an upside potential of 22%. Looking at those ratings down below, you can see a big group of them bumping up those price targets following the earnings report. Our low end is a hold at $47 for an upside of 3.3%, while our high end price target is $69 from Wells Fargo for an upside of over 51%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, it's a stock we've chatted about before with Trimble. They trade under the ticker TRMB, currently priced above $73 per share. We talked about them last spring around April or May, and then more recently again around December. In the past year, the stock has climbed over 25%, and in the last 3 months is up 3.6%. Their PE ratio comes in at 12.3, and they do currently score a 10 out of 10 on the TipRanks Smart Score. Trimble is a technology company that provides positioning technology solutions. Their technology aims to connect the physical and digital worlds by integrating hardware, software, and services into comprehensive solutions. They offer software and hardware solutions for construction site management, including machine controls for heavy equipment, positioning technologies for surveying and project management. They provide precision agricultural solutions to improve farming efficiency, including GPS guidance and auto steering systems for tractors and other farm machinery. They have fleet management solutions like routing and scheduling software and mobile communication, and other geospatial solutions like high-precision GPS receivers, laser rangefinders, and 3D scanning equipment. They'll be sharing their fourth quarter earnings report next week on February 19th. This does follow a solid Q3 back in November, where they had an earnings and revenue beat, plus saw record annual recurring revenue. For their fourth quarter, analysts are anticipating earnings per share of 89 cents, which would be a 26-cent increase over last year's. This follows their third quarter earnings report of 70 cents per share, which beat expectations by 8 cents, and revenue of $875.8 million, which beat by over $11 million. Along with record ARR, they also saw record gross margin and raised their full-year guidance. Back in December, we did see an analyst from Wolfe Research upgrade their rating on the Trimble stock to a buy. They said that management has divested the company's more macro-sensitive and underperforming ag and mobility business as they align their focus on faster-growing segments that have better margin expansion opportunities. They note that the new long-term targets presented at the company's recent Investor Day show improved visibility into how strong execution, a more focused go-to-market motion, and meaningful cross-sell opportunity will translate into ARR growth in the low to mid-teens throughout 2027. And with 6 current analyst ratings, Trimble is another stock that comes in as a unanimous strong buy. The average price target is $89 for an upside potential of 22.5%. Looking at those price targets down below, fairly closely grouped here, our low end is $84 for an upside of 14.5%, while our high end is $95 for an upside of over 29%. So that is a quick look at 3 strong buy tech stocks, all with PE ratios under 15. Let me know your thoughts on these companies in the comments down below. Tom, I especially hope to hear from you, and let me know which stock catches your eye the most. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day. I'll see you back here next time.